Hey, it's Amy Lewis from the KFBK Morning News with Brandon Haefele from Catalyst Mortgage. And you know that home values are going up in our region. We just did a news story about it a couple days ago. Big news, right? Well, is your home's equity going up? Is it time to think about getting a home equity line of credit? So first of all, Brandon's going to explain what is a home equity line of credit.
A home equity line of credit, Amy, is a line of credit, almost like a credit card, attached to your mortgage, or I'm sorry, attached to your property, that lets you pull money when you need it, or leave it at zero, just like a credit card, with no balance at all.
Is the market ready? Is this the time of year to do this, to look into this?
You know, home equity lines of credit, people have different opinions on them, and I believe if you own a home and you have equity, you should have a home equity line of credit for that rainy day, for an emergency. Credit should be used, really when you need it. If there's something that comes up, or home repair, or something like that. But you can also be strategic with lines of credit. Right now, for instance, I recently actually just redid mine, and they'll give you little guarantees like 2.99 fixed for 12 months, and then it goes to a variable thereafter.
Yeah.
But point is, you can really leverage that. Let's say you're kind of savvy and you could buy a car and you're going to pay it off in 36 months. You could potentially buy a car with your home equity line of credit and then have tax deductible interest, because it's through your mortgage. You'll be able to write that interest off. Whereas if it's on a regular car loan, you wouldn't. Or if you're trying to put in a pool and you need to do some quick repairs, whatever it is. There's so many options available for a line of credit, but you have to be smart about it. Really, it's not something that, it's not a credit card to just keep charging and charging, because again, you get into a nasty mess.
Sure.
But to have the safety and or to be strategic with it, it's a great thing to have.
So break this down just very simply then. They're very different. A home equity loan versus a home equity line of credit.
So a home equity line of credit, again, is a variable credit card. They do have options where it might be an introductory fixed for 12 months and then it goes variable. A home equity loan is essentially like a second mortgage, where they're just going to say, okay, here is X amount of money, this is your interest rate. And home equity loans traditionally are higher interest rate. I mean, it could be, and again, we're just talking variables.
Right.
You get 5 to 8%, depending on that second. So if you're really going to do a loan that you need money for a long-term thing, I would actually look at doing a refinance of your first to do that cash out, because it's going to be a lower interest rate. But again, an equity line gives you the flexibility if something comes up, emergency, potentially if you want to do a short-term thing for like a car loan, something small that you're going to pay off quick. Equity line's good for that.
Okay, I love the name HELOC. So it's a home equity line of credit, HELOC.
Right.
Is it different with regard to paperwork and the things that I have to supply you in getting like a home equity loan? Is it different, or is it the same?
It's actually really about the same.
Okay.
You have, most of the times, and I want to be clear, independent mortgage lenders can offer second mortgages when you're purchasing, like Catalyst, other mortgage companies out there. When you do you can do a first and second when you buy a home. But to be clear, really to get the best home equity line of credit, or things like that, line of credit for your house, it's to go to your local credit union, go to your bank, shop around and see which bank is going to offer the best. Independent mortgage companies really do not give competitive rates when it comes to any type of line of credit. So I would say you go to your bank and ask them, what the interest rates would be and how it works. But yes, the process, overall paperwork is going to be the same. Pay stubs, W-2s, tax returns. You're still going to have to provide everything, to obtain it.
Is there a right way, or maybe a not so right way, to use your home equity line of credit? Are there wrong ways to use that money?
Absolutely. Paying for Cabo.
Not
a good way.
Okay.
Right way.
Paying for college?
Potentially. It really, again, will come into how much you're talking, how long it's going to be. And that's something that, really, when you're shopping around, think about those kind of things first. Okay, hey, are we going to be carrying a, $50,000 balance for our, child's education that's going to take us several years to pay off, maybe 5, 6, 7, 8 years? Well, then maybe an equity line is not the right decision. It might be refinancing that first, so everything's at a lower fixed rate. But if it's something that's going to be short-term, that's what an equity line is great for. Short-term purchases, equity line. Long-term, refinance your first, consolidate it in there so it's low and fixed.
You're firm about the no Cabo on the HELOC?
I'm very sure on that one.
Yeah, it's worth a second question, right? Thanks, Brandon.
problem.
So that's the Catalyst Report, and you can see this on the Facebook page at Catalyst Mortgage or catalystmortgage.com. You know, we have the Catalyst Report it's actually Monday mornings from 7 to 8 on KFBK, and you can check it out as well at catalystmortgage.com. What's your phone number?
916-287-7777.
Or as I said, better, catalystmortgage.com.